In this video, you will discover how to plan your budget if you are a freelancer. Keep listening to know the most useful information. Freelancing is risky without a financial plan. In a perfect world, customers' payments would be as regular as your work, but most freelancers know that payments can fluctuate and often come later than promised. As a freelancer, in order to survive or even succeed, you need to take care of your money. If you don't think you're making enough money to get the security you need a plan more than anyone. Savings are not optional. The stress of undependable income is lessened when there's backup money in the bank for emergencies. Even normal expenses such as groceries or a utility bill can transform into an emergency when the money isn't there. CNN Finance explains that Chris and Jane Peterson, freelancers living in Minnesota, met with financial planner Colleen Weber for advice on how to get and stay on track. After years in television, the Petersons started their own business. Like most freelancers, they love their newfound freedom. As with many freelancers, it can be difficult to replace dependable finances with ones that can change overnight. Webb suggested that the Petersons need 4 months' income as savings. Some financial planners recommend 6 months. The more your income fluctuates and the more you spend, the more you need to save. You should pay yourself first. The advice from financial experts is to pay yourself first. It sounds logical, but it's not as simple as it sounds. It also may not be what you think it means. With looming bills and thin income, paying everyone besides you might seem like the most responsible choice. Paying up front doesn't mean letting other responsibilities slip away. This is just an organizational technique, not an idealistic proposition. In the case of an employer/employee, the salary paid to you is yours, free and unique. When it comes to freelancing, there are many things to consider. Subscribe to the channel and find out useful information about business every day. Separate accounts to keep your finances organized. With a segregated bank account, you can divide your finances into manageable chunks, which can help avoid the ups and downs of overspending and erratic income. Here are examples of accounts that can benefit freelancers. The first is a business account. This account receives payments from each of your freelance clients. This is the landing point for all your income. Imagine this is an employer account from which the employer pays the employee a fixed salary. The second one is a personal account. This account is used for personal income from the business account pool. Think of this as a staff account. Transferring everything from a business account to a personal account would defeat the purpose. Determine the fixed salary your business account can support and transfer this amount to a personal account only periodically. This is how you pay for yourself and generate more reliable income. The next one is taxes. Freelancers don't have the luxury of employer that withholds tax. You have to do this yourself. A separate tax account means that when Uncle Sam wants his tax cut, the money is there, whether you pay it quarterly or annually. As in the employer/employee case, the tax comes from the business account or your gross income, not your personal account after you get paid. The last one is savings account. Every freelancer needs at least one savings account. If you have multiple targets, for example, university or vacation funds, the main savings is your safety net, and you can tap into 4 to 6 months of income if you lose customers or your payments are unusually slow. How to make money? Perhaps the biggest freelance challenge is building a savings network. If you're already struggling, how can you salvage what you don't seem to have? Here, you need a sharp eye, a frugal mind, and healthy honesty. Money Crashers blogger David Bakke says there are many ways to save that you might not know. What's more, they add up faster than you might think. Maybe you can refinance your home and get a better interest rate with a lower monthly payment. The difference is used for savings, not your disposable income. Discretionary spending is also subject to some adjustments. If you dine out once a week and spend $50 each time, you'll be much cheaper eating at home, saving nearly $2,000 a year. Use it to boost your savings anywhere you can lose fat. Once you have a convenient savings account, you don't have to think frugally every day. With a safety net in place, you can treat yourself well without compromising your liability. Don't put it off. Financial management may not be at the top of the list of most popular tasks. It takes time, and the bold facts that might emerge can be intimidating. One thing is for sure, the sooner you start, the better for you. Finance Advisor is passionate about helping you to achieve financial goals through education and with powerful tools, personalized insights, and much more.